Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar. An indecisive spinning top yesterday with a long tongue on top after the previous session's bullish engulfing pattern. Prices for a second session were based on a closing basis on the combination of the dark blue July 2017 to November 2018 head and shoulders neckline, currently at 109.41, along with the close by the 50% Fibonacci line of the January 21 to September 22 move at 109.44, so they're pretty close together. Further up we have the purple extension to the January to February 2021 reverse head and shoulders pattern, currently at 110 even, which was pierced, and higher up still we have the bright green July 2008 to date downtrend, currently 111.30, and the congestion at 111.39 made from the March 20 and December 2023 highs. This area capped the market last Thursday. Above this is the September 2024 high at 112.13, the pink May 2011 to date downtrend, currently at 112.37, and then the significant July 23 high at 112.76. Meanwhile, below we have the newly drawn dark blue late February to date uptrend, currently at 108.44, with further down the gold long moving average, currently at 107.34, and the 250% Fibonacci lines at 107.09 and 106.78. The action higher revitalizes the idea of a possible annual key reversal pattern here. Now please keep an eye overhead on the September 2024 high at 112.13. You see, if prices exceed that, then we have set up the conditions for this market to make up that rarest of patterns, a possible annual key reversal. However, we have a number of significant resistances ahead of that. That all being said, we also have set up the conditions right now for the whole of March to date action to be a bullish halfway hesitation, potential target X in the 112.75 area. Now so far today, bracketed originally by the overhead purple neckline and the 50% Fibonacci and dark blue neckline below. However, it seems the market is more interested in testing the upside, punching up through the purple neckline, though still below yesterday's high. Cable, aka sterling against the US dollar. A second bullish white Marubozu yesterday after the previous session's bullish Harami and bullish opening white Marubozu. Prices utilized the combination below as a base of the first of the twin 50% Fibonacci congestions at 127.34 plus the dark blue upper trend line of the old January to early March dark blue ascending wedge pattern. That's currently at 127.40 for a move higher. Initially passing through the gold long moving average, currently 128.12, and the November 2020 low at 128.52. However, all the congestion overhead formed over March between approximately 128.15 to 130.14 capped the rise, and prices finished up right on the gold long moving average. Whilst we did have an initial follow-on low at the start of this week to last week's weekly key reversal down, this has now finished, and we're seeing the start of a recovery. Okay, so I recently asked you to continue keeping an eye overhead at the September 2024 high at 134.34. I would still ask you to keep an eye overhead to see if prices exceed that. Then we may then have set up the conditions for this market to make that rarest of patterns a possible annual key reversal. However, we have a number of significant resistances ahead of that, some which I've already mentioned, but I'll also add to these the December 2020 low at 131.33, the July 23 high at 131.44, the purple neckline currently at 132.41, the small November to early December 2024 reverse head and shoulders continuation pattern, and this capped the market last week. The Fibonacci and market high base congestion between 132.46 to 132.98. That includes just outside it the bright red 2021 to date downtrend, currently 133.02 before we reach the September 2024 high. Now, there has been a question raised as to whether the whole March to date action is perhaps a bullish halfway hesitation. This question is open, and right now I have my doubts about it, because if it did happen, it would be a very, very sloppy one. But it is still a question out there. Now, so far today, a basing action on the gold long moving average, pushing up through the November 2020 low, but not by much, as a run into that congestion between approximately 128.50 to 130.14. US dollar against the Japanese yen. A combined outside day, bullish piercing line pattern and bullish double pattern, all with a long tail on it yesterday after the previous session's attempted 2-day bearish tweezer top pattern. Prices dipped down to the combination of the 50% Fibonacci line, the January 23 to July 24 move at 144.58, and just below the broken pink upper trend line currently at 143.51 of the well highlighted early February to late March descending wedge pattern. However, this testing lower proved to be too much for the market and prices reverted higher, finishing up just under the lesser Fibonacci line at 148.11. Overhead, we still have the formidable resistances provided by the combination of the bright red upper tine, currently at 150.27 of the July 24 to January 25 bearish Andrews pitchfork, as well as the twin 50% Fibonacci lines, the July 23 to July 24 move at 149.61 and the whole of the 2024 move at 150.76, as well as the declining gold long moving average, currently 150.92, and the green short medium moving average, currently 150.31. All these sit solidly right now well above the market. Overall, the market remains within the larger big picture bearish item, and that is the bright red July 24 to January 25 bearish Andrews pitchfork, with the bright red upper tine above and the middle tine below, which is currently at 134.98. This pitchfork shows the bearish angle attack of this market. Now, so far today, a reactionary move back down, moved back up, but still just about within yesterday's true range. We've moved all the way back down, just beaten out of yesterday's true range, but only just. US dollar against the CNH, the offshore Chinese yuan. A bearish engulfing pattern yesterday, if only just, after the previous session's bullish long white Mariposa. Together they made a pipe top pattern. Prices dropped down through highs of October 22 and September 23 at 737.49 and 736.81 respectively, and most importantly down through the resistance that has become support of the congestion between 734.41 to 734.96, closing ever so slightly below it. Overall, the last three sessions have, even though, been a pretty good follow-on higher to last week's weekly key reversal up. Okay, so recently we have seen prices break higher over the dark blue downtrend, currently at 723.45 of the January to March 2025 descending wedge pattern. This break higher gave a primary target X in the 735.63 area and a secondary, harder to reach target X1 up in the 741.28 area. I suspected the latter would be especially quite a reach. However, we have reached both targets. Now, I have also drawn a pair of pitchforks for the same move, something I do not usually like doing, as I prefer one or the other. Nevertheless, prices are now in between the overhead bright green middle tine, currently 745.5, and the lower tine below, currently 728.74, and the overhead purple middle tine, currently 738.93, and the lower tine below, currently at 725.84, both of the late September 2024 to mid-March 2025 move. Both have been penetrated, but right now I favour the bright green bullish Andrews pitchfork, the more acute one, to show the bullish angle of attack at the moment. Now, so far, a reactionary move back up from the start, easing through the congestion between 734.41 to 734.96, but getting capped by the September 23 and October 2022 highs. US dollar against the Brazilian real. A combined key reversal down and bearish closing black Mariposa yesterday after the previous session's bullish closing white Mariposa. The market's rise over the last couple of sessions was capped on a closing basis by the newly drawn bright red middle tine, currently at 601.25 of the mid-August to 24 to early April 25 bullish shift pitchfork. Though admittedly, prices did trade higher, they just didn't close any higher. The market dropped down through the May 2022 high at 597.08, the recent 50% Fibonacci line at 595.21, the flatlining mauve medium moving average currently also 595.21, and the March 21 high at 588.04, but halted just before the October 2020 high below at 580.70, and a little lower down the flatlining green short medium moving average, currently 577.59, and the gold slowly rising long moving average, currently 575.43. The recent sessions this week have been a suitable follow-on higher to last week's weekly key reversal up, but that is over now. One key outstanding feature that is still in development is that we are set up now for a possible monthly key reversal here. Thus, if we close on Wednesday, the 30th of April, either over 588.52 or under 584.10, then we'd be on. Anything in between, and we'll have a lesser outside month pattern. I'm not going to speculate on which, because it is far too early. We're not even at the middle of the month. US dollar against the Mexican peso. A combined key reversal down and bearish engulfing pattern yesterday after the previous session's third bullish white soldier. Prices were capped by the combination of the overhead 50% Fibonacci line of the April 20 to April 24 move at 20.9990 and the bright red upper bull channel line, currently 20.1186, plus the July 22 high at 20.0501. And move lower down through the significant September 22 high at 20.5765. Now this is significant, this September high. It's the center of a congestion area stretching from roughly between 1720 up to around the 2083 area. The prices carried on lower down through the supposedly significant congestion made up from the combination of the flatlining green short medium moving average, currently at 20.3581, and the flatlining medium moving average, mauve medium moving average, currently 20.3582, and the old bright red lower bull channel line, currently at 20.3966, of the very gently rising early November 24 to early March 25 broken lower bull channel line. The fall halted at the October 22 high at 20.1720. Further below, we have the significant congestion zone between 1987.96 to 1991.31, reinforced from below by the rising gold long moving average, currently 1986.95. All this has set up the conditions for April to possibly become a monthly key reversal. Thus, if we close on Wednesday the 30th of April, either over 20.53.10 or under 20.45.80, then we'd be on. Anything in between will have an outside month pattern. Now, right now we are looking at an outside month pattern, but it is still very, very, very early as yet. Now, so far today, a reactionary move back up from the open, pushing up through the combination of the green short medium moving average and mauve medium moving average and a bright green middle time, bright green short medium moving average. We've already done that, but it's barely moved up over it, and we're still stuck within it.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.